Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Mueller Industries stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a mid-cap company, 5.6 billion market cap. They're trading at $49 a share, and they have 114 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. It looks really good. It did grow a lot from 200 million to 658 million. And it's positive every year. So it looks like they run a pretty healthy, efficient company. Net income is the profit or loss on the income statement. It's revenue minus expenses. That also grows a lot from 144 million to over 600 million. Revenue is a sales for the company, and that grows nicely from 2.4 billion to 3.6 billion. It did peak in 2022 at 4 billion. So it has come down 10% since 2022, as you can see here. It grew a whopping 57% from 2020 into 2021. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 7.6 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $6.8 billion. We divide that by 114 million shares. And we get a calculated stock price of $60. They're trading at $49, so they're trading at an 18% discount. It's a buy according to the model. This is one of those stocks that can trade sideways for a really long time, so you really never know when it will pop. There are 18 companies in the same industry as Mueller, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a little more than the average in CapEx, 48 million. CapEx is the investments in property, plant, and equipment. ATI spends the most at 173 million. They have a really good debt-to-equity ratio, 0. This implies they have no debt. Half the companies in this industry pay a dividend. They pay on the lower side, 1.2%. Some pay north of 7%. But if you're a dividend investor, don't go chasing those yields because you end up losing a lot on your investment. Because if you chase those high yields, oftentimes the stock price goes down a lot and they end up cutting their dividend, so it's a loss-loss. They generate the most free cash flow out of any company on this list. They rank number 1 in terms of market cap, 5.6 billion, so it's a pretty small industry. Their price to book is 2.5. AP has the most attractive at 0.5. Look at their PE and price to free cash flow, really solid, both under 9. This implies they're a great value. Look at CompoSecure, 5.4 and a 1.4 price to free cash flow. It's almost like they're giving the company away. Price to sales is a little on the high side, 1.6. AP is number 1 at 0.1. They generate a good amount of revenue, 3.6 billion. But 3 companies generate more than 4 billion, 1 more than 5 billion, Ryerson Holding. And they're still growing. Their 5-year annual revenue growth rate is 8%. Northwest Pipe is 24%. Let's take a look at their most recent 10Q. This is their income statement. Third quarter of 2023 versus the third quarter of 2022. Revenue is down. It's 820 million. Last year, 945 million. Let's see if they give a breakdown of the revenue so we know what it is. Here's a breakdown of the 820 million. They have 3 segments: piping systems, industrial metals, and climate. Revenue in piping systems, 568 million. 457 million of that is in tube and fittings. 111 million in valves and plumbing specialties. Revenue in industrial metals, 141 million. Brass rod and forgings, 112 million. OEM components, tube and assemblies, 19 million. OEM is original equipment manufacturer. Climate, 120 million. 29 million in OEM components, tube and assemblies. 91 million in flex duct and HVAC components. HVAC is heating, ventilation, air conditioning. All the expenses directly tied to generating the 820 million are 579 million. That's called cost of goods sold because they have to buy some products and materials. They also have to pay for labor, all those direct costs. Then you have depreciation and amortization. They carry fixed assets on their balance sheet and depreciate them over those assets' useful life. Selling, general, and administrative expenses, 48 million. An example of this is marketing. Then they had $6 million of asset impairments. If you write down the value of an asset on your balance sheet, you have to pass through the loss onto your income statement. So operating income, $181 million, down from $205 million. Then you have net income of $136 million, down from $156 million. Their shares outstanding are going up. It was $113 million last year, now it's $114 million. But their dividend has gone up. It went from 12.5 cents to 15 cents. Let's take a look at their balance sheet. This is 9/30/2023 versus 12/31/2022. Current assets of $1.9 billion. Current liabilities of $300 million, so they have a really high current ratio. They're very liquid. Let's look at their current assets. $1.1 billion of cash and short-term investments, $409 million of accounts receivables. So when they sell on credit, this is how much money their customers owe them. $391 million of inventory, and they break down their inventory into 3 steps. Raw materials, $107 million. Work in process, the second step, $69 million. And finished goods, the third step, $226 million. Let's look at their non-current assets. $377 million of PP&E, property, plant, and equipment. $151 million of goodwill. A company can only get goodwill on their balance sheet through an acquisition. You cannot internally generate goodwill. Same thing with intangibles, $47 million. You get it from acquisitions. You could internally generate intangible assets, but it's really difficult, and most companies don't do it. They have investments of $97 million. These are investments in other companies. So total assets, $2.7 billion, up from $2.2 billion. Total liabilities, $412 million, down from $428 million. Their largest is accounts payable. This is how much money they owe other companies for buying on credit. You can see they pretty much have no debt, $1.3 million. Some of you watching this video probably have more debt than them. When you take their assets minus their liabilities, you get their equity of $2.25 billion. So they raised $313 million from selling their business. They profited $2.5 billion from running their business. They also buy back lots of stock, $530 million. When a company buys back its own stock, it carries on the balance sheet as treasury stock. That's a contra equity account. It brings down your equity balance. When you hear the word contra, that means it brings down the value of an associated account. Let's look at their statement of cash flows. This is for the trailing 9 months. Their net income is really close to their operating cash flow. This means they have very little non-cash items on their income statement. Depreciation and amortization is usually the biggest, $31 million. Stock-based compensation, $17 million. Let's look at their investing section on their statement of cash flows. They spent $39 million of PP&E, CapEx. Last year was $30 million. In their financing section, you'll see the dividends they paid, $50 million. Last year was $42 million. They bought back $19 million of stock. Last year, $38 million. Let's look at MLI on Simply Wall Street. Its last price, 48, $5.7 billion market cap, up 2.5% in the past week, up a solid 40% in the past year. Let's learn a little more about the company. They manufacture and sell copper, brass, aluminum, and plastic products in the US, the UK, Canada, South Korea, the Middle East, China, and Mexico. So they have a pretty wide reach. They have 3 segments: piping systems, industrial metals, and climate. The piping systems segment offers copper tubes, fittings, line sets, and pipe nipples. PEX Plumbing, also known as cross-linked polyethylene. They also do radiant systems, plumbing-related fittings, and plastic injection tooling. They also resell steel pipes, brass, and plastic plumbing valves, malleable iron fittings and faucets, and plumbing specialties, and supplies water tubes. This segment sells its products to wholesalers in the plumbing and refrigeration markets, distributors to the manufactured housing and recreational vehicle industries, building material retailers, and air conditioning original equipment manufacturers. The industrial metals segment manufactures brass, bronze, and copper alloy rods, plumbing brass, valves, fittings, and gas assemblies, cold form aluminum and copper products, machining of aluminum, steel, brass, and cast iron impacts and castings, brass and aluminum forgings, brass, aluminum, and stainless steel valves, fluid control solutions, and gas train assemblies to OEMs in the industrial, construction, HVAC, plumbing, and refrigeration markets. The climate segment offers valves, protection devices, and brass fittings to various OEMs in the commercial HVAC, and refrigeration markets. High pressure components and accessories for the air conditioning and refrigeration markets. Coaxial heat exchangers and twisted tubes for the HVAC, geothermal, refrigeration, swimming pool heat pump, marine ice machine, commercial boiler, and heat reclamation markets, and insulated HVAC flexible duct systems. They were founded in 1917, over 100 years ago, headquartered in Tennessee. Is anybody here from Collierville, Tennessee? Probably not. Here's their stock price since 1991, and you could see it has a great upward trajectory. If you held the stock for at least 5 years, you should have made money, because overall the stock just pretty much goes up. But in the past 5 years, it went from $15.58 to almost $50, plus they pay a dividend. So you would have been really happy with that investment. Simply Wall Street is really bullish on this one. 133, they say they're 64% undervalued. Their yield is 1.3%, which they can easily afford. Payout ratio of 10%. Payout ratio is dividend over net income. The CEO's compensation is $35 million. Their tenure as CEO is a long time, over 15 years. This red line shows their debt. You can see they're debt-free now, or pretty much debt-free, under $2 million of debt, and lots of equity, over $2 billion of equity. And you can see this green line is their cash. They have lots of cash on their balance sheet. A really healthy company. Here's their dividend yield since 2014. It was 1%. Peaked at 1.8% in 2022. A lot of insider selling in the past year. One small buy, but mostly sells, as you can see here. Over 1 million shares have been sold in the past year. 1,200 shares have been purchased. This is by insiders. 97% of the company is held by institutions and 3% by insiders. Their biggest shareholder is BlackRock at 16%, then Vanguard. Gabelli Asset Management, 5.75%. First Trust, 5.2%. Lots of big funds own this stock. Bill Gates Capital Management, Victory Capital Management, BNY Mellon, First Trust, JP Morgan, Fidelity. Their employee count has gone up. It was 3,900 in 2013. Now it's 5,100. And the ticker trades in two places, the New York Stock Exchange and Deutsche Börse. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.